So Joseph, it's been a busy week for Vale, the Brazilian mining company. What's been going on?
They've sold their entire stake in Norsk Hydro, which is the Norwegian aluminium producer, for about $1.8 billion, which is interesting because it sounds like Vale is continuing to focus on iron ore, which makes sense given they're one of the largest exporters of the stuff around the world. But the question really is whether that's bringing them closer to Brazil and their iron ore operations there, which is maybe a risk investors aren't considering next to the more obvious ones of the iron ore market, which are obviously Chinese demand.
Well, let's start with the iron ore first. Why is Vale so keen on iron ore that it's shedding assets in other metals?
The profit margins in aluminium are thinner and more volatile than iron ore. I think we've seen that over the last year. So it definitely makes sense for them to aggressively cut costs in other base metals compared to what they've done with iron ore, where if you look at the cash cost they have for mining and moving the stuff, it's down to like $22 per ton this quarter compared to $24 the last quarter, which is pretty cheap. And their shipments are, they're pretty big. They're the third largest last quarter in Vale's history. So they're definitely making up for volume compared to what could be quite a weak period for iron ore price growth.
Well, so that's why they're so interested in iron ore. But selling out of Norsk Hydro and other assets also brings them closer to Brazil. But when thinking about Vale, is it better to think about it in terms of a company based in Brazil or in terms of a company that serves China? What's the more important dynamic?
The obvious poison to pick would be China and the shape of Chinese demand for the next year as supply of iron ore can increases next year. We all know the problems Vale has had with China before, including those super tankers it built to ship iron ore to Chinese ports, which didn't accept them because the ships were apparently too big. So that's a risk investors know already, but they probably haven't spotted how Vale's share price tends to follow what's going on in Brazil over the last kind of 9 months, which is, I think, a bit of a danger sign, especially given the Brazilian macro outlook isn't looking great. It can still spook investors, basically, especially when it comes to something like taxation, because Brazil is in a fiscal mess too, and Vale currently has unresolved tax liabilities from its profits on foreign subsidiaries, of which it has many, like any other miner. And the bill there it hasn't provisioned for, it's still trying to negotiate, but it could be pretty big considering its net cash, which is about $7 billion. So if it has an ultimate tax bill of $10 billion spread over several years, that's still quite an issue and hasn't been priced in, I think.
Well, Vale, it sounds like, is a far less diversified company than it used to be, but investors need to keep an eye on Brazil just as much as they need to keep an eye on demand from China. Joseph, thank you very much.
Thank you.